Thanks everybody who's joined online. Yes, Gwilym and I are here to share our perspectives about some of the recent challenges that we're seeing in climate tech. There's a lot of splashy headlines. Some to me are downright terrifying. They're not just splashy, and a lot of it comes down to bankruptcies. And really it even goes beyond that with challenges raising, right? So a lot of times, a few years ago, we used to think, hey, once we get to the stage where we can raise massive amounts of capital, we're out of the water. But we're seeing some examples that that's not the case. So Willem and I want to start a new narrative on this. We want to point out it's not just climate tech. It's really at the heart, at the root of this are kind of some age old problems about when you have a lot of cash on hand, there are a lot of ways to go through that cash and not get to a good outcome. So really, we want to encourage people to think beyond the raise. I know that's important, but think beyond the raise, the next series, and how to stand up profitable operating companies in our line of business. So some quick intros here. Gwilym, can you give me a thumbs up? Are you able to see the slides? Awesome. Okay, cool. Okay, I'll do my intro and then Gwilym, I'll kick it over to you. Yeah, as Ned said, I'm with At One Ventures. I'm a vice president of manufacturing at the firm. What I work with our portfolio companies to guide them from lab scale, maybe just a technology spinoff, into a manufacturing powerhouses is where we want to see them get to. I have 18 years of manufacturing strategy, starting at bench scale discovery all the way through greenfield manufacturing commissionings. I've before joining At One, I've had careers. Thank you, Gwilym, at Merck, Givaudan, Conagra, and CRB Group. Gwilym, I'm going to kick it over to you for an intro and see if I can figure out what's happening with the slides. Gwilym, are you able to hear me? I'm unfortunately not able to hear you.
Okay, is that better?
There it is. Yes, thank you.
Okay, well, I was just singing your praises, Tony. I was just saying thank you for inviting me on. I like to describe myself as a digitally literate operations leader. So over my 25 years, I started as what I like to describe a nuts and bolts process engineer in automotive, moving into operational leadership, moving into supply chain transformation, all within the Nissan automotive world before moving into BP, working actually heavily involved in improving operations through the use of digital and actually building out those digital products, and then migrating back into a more operations focused role for a private organization called Rerick, where I led and scaled their manufacturing footprint and their service centers before moving into Proterra to undertake that as a new challenge. So thank you for having me. And yeah, please, Tony, let this be a back and forward session. So feel free to interrupt me as we get into this.
Love it. Thanks, Gwilym. All right, so I want to start out by framing the challenge in front of us, and then Gwilym's gonna talk through his story, his journey, and what I love about Gwilym's background. It's the Proterra story, but also he's building on so much manufacturing experience, so he can draw from his entire career on that. But let's start by framing the challenge in front of us. We all can point to unicorns that have unfortunately not panned out. A lot of us are still reeling from Northvolt's bankruptcy. Personally, I had a lot invested in the plant-based meat area, and that did not become the revolution that we were all hoping for. On top of that, funding is challenged, and it's not just that bankruptcies are new to the venture space. They've been around for a long time. What I think is turning heads right now are raising massive capital, even enough to build greenfield facilities, and we still see companies struggling. But what I want to make the case for, though, is that it's not just climate tech. So as we were putting together this webinar, we came across a study in 2019 before climate tech was even a sector or an area that said companies raising more than 100 million before their IPO were underperforming those who weren't. So I think it's good news that it's not just climate tech. It's not something that we're doing. I think part of the challenge though is too much money and not knowing what to do with it. So to kick things off a little bit before Gwilym gets into it, as we were talking through these problems, if you're raising $1 billion, you're likely in a great market, and you've got very likely an awesome team with a ton of talent that people can see your potential. Things that are typically missing though are kind of boring, a little drier. There are things like operational discipline, things like financial controls, even just kind of basic planning and project management. And then the other piece, partly why I'm so excited that Gwilym is here, is that as investors, we've seen the power that seasoned manufacturing talent brings to the table. And I think that's a big transition for a lot of companies to go from more of an R&D or a technology stage to a true operational powerhouse. So Gwilym, I'm gonna let you draw on that vast experience as you tell the Proterra story, and then hopefully we'll dialogue back and forth and get some questions from the audience. So over to you.
Thanks, Tony. So I'm going to start with, thank you, Proterra's story, just to give an overview of the journey that Proterra has been on. So Proterra was founded back in 2004, essentially as a transit bus manufacturer with an ambition to produce electric buses. Now, back at that time, it was clear that we couldn't find a high enough performance quality battery, very, very new at that stage. So around 2010, Proterra developed its own battery pack exclusively for the use in its transit bus products that it was manufacturing. And around 2015, so 10 years after founding, they established a battery engineering team out in Burlingame, California. And part of that was because there was interest growing from not just obviously our internal manufacturing, but interest from outside around the battery product. It was one of the best, and still is one of the best products that's out there. And at the time that was recognized, and we had external customers coming in looking to use that technology. So 2017-18, we launched our third generation battery pack. And we started partnerships with some key customers who are still customers today, who take our batteries, for example, being Daimler as one of those core customers. 2019, so 15 years after launch, the business broke into three separate divisions. One was the battery business, which was a technology horizontal itself, the transit business, which was essentially bus manufacturing, and the energy business, which was mainly focused on energy infrastructure, but complemented obviously the need to charge products, buses, or batteries that were then put into the transit buses. And that led to, in 2024, Volvo, so Volvo AB, not Volvo Cars, so Volvo Trucks, acquiring the battery business, so one of those three business units. And we are now a wholly owned but independent subsidiary of Volvo AB Group. And we produce battery products for, of course, for Volvo. Good example being the all-new Mack Pioneer, which is the Mack truck that's made here in the US. But also serving external markets. And I already mentioned Daimler as one of our key customers, but other key customers being the likes of Komatsu and Taylor Machine Works. So that was in 2004. We launched our Greer facility just prior to that, which was the picture you can see here, which is our manufacturing plant in South Carolina. And we started the scale-up journey. And that's where we are now. So that's the history of the business. From my personal side, I covered it a little bit on the introduction, but have over 25 years in engineering and operational roles, spanning, yes, engineering, but supply chain, digital, operational leadership. And through those 25 years, I've been blessed with launching, yes, several new processes and plants and scaling operations from 0 to 1 in large corporates, but also established private organizations and technology startups. So what I'm looking to do today, and to going back to Tony's reason why we're gathered here today, is I want to share some of those lessons that I've learned, and transparently, I've also fallen foul to, as I've been scaling operations. So maybe just before I get into the meat, what I'm talking about when I refer to scaling operations is the core operations. So what I mean by that is, think the manufacturing process that owns the process that the R&D teams have developed and the engineering teams have developed, and all of those sort of surrounding functions of that core, and how they are set up to support and serve the manufacturing teams. So as I go through this, I'm drawing on my experience in Proterra, but it is not just Proterra. Tony alluded to this. This by no means, scale up and startup challenges in operations are not unique to climate tech, new tech, any type of tech. I've experienced these across Nissan, across BP, and across my previous organization prior to Proterra, which was Rarick. And they were very, I'm going to call them traditional manufacturing organizations. So scaling core operations, in my view, what you're trying to do and what you have to do is have the 4 M's, the 4 M's that make up the industrial process: the man, the machine, the method, the material. They all need to work seamlessly together. And there's 3 key lessons which I would like to share around my experience that I feel we need to focus on. And I talked about the 4 M's, and you'll hear me talking a lot about man and method, so people and how work gets done, because those really underpin stable operations, whether you're manufacturing any type of product. So key lessons learned, there's 3 of them that I'd like to cover. Number 1 is the importance of defining the operating culture day 1. And you need that to stabilize and enable the fast scale up. So that's point number 1, defining the operating culture at the very beginning. Second thing is thoughtful organizational growth. And the third thing is developing processes with a line of sight to your end customer. And I'll get into what that customer is, but it is not necessarily the customer that buys your product. You think internally about who's going to take the output of this process development. So they're the three points that I want to hit. And firstly, getting into the defining the operating culture in day 1. So at its root, even in this world of AI and technology enabled operations, people are the foundation of every organization, and they're super critical in operations for launching and scaling up. When you launch a new operation, you bring together really talented individuals, but they're all typically from disparate organizations. You may have some seed people who have come from one of your other sites, but you're bringing in people from Tesla, from GE, from AWS, all excellent people, exceptional talent, but they all have different ways of understanding how work gets done. So essentially, we all speak different languages, or they all speak different languages. Left to their own devices, these exceptional leaders and exceptional talent, they do what they're paid to do. They go away and establish their processes, their ways of working, they build their teams, and they build their culture. But the problem with them building their culture, their processes, and their ways of working is it's not your culture. And before long, you do, and I've seen this in every organization I've been in to some extent, you end up with silos. And 9 times out of 10, you end up with conflicting focuses. What's important for the organization from the different teams' viewpoint, and you waste calories not in fixing the problems that need to be fixed to scale and get the operations. You end up with more internal strife. So I know this sounds basic, but my advice with a capital A when you launch a new process, a new site, you have to define from day one what you expect your operation to be focused on, how you expect your operations to run, who is accountable for the different metrics or getting the work done in the operation.
Well,
Um,
and
yes, sir.
what does that look like on kind of a tactical level? Are you posting KPIs in the facility on boards for people to see? Are you writing job descriptions? Are you
Yes, but not at the beginning. It doesn't need to be complicated at the beginning. If you look at successful organizations, the Toyota approach is Toyota TPS, Toyota Production System. Volvo use VPS, Volvo Performance System. We use Proterra Production System. It's at its core, it's a high level explanation of who's accountable for what in the operational functions.
Hmm.
Yeah, and from that, you talked about KPIs, so you need to get to KPIs at some point. But first outlining, the accountability for producing the product, who is the customer of who, if you like, and you end up getting to, as you deploy this after the definition, you end up getting to the KPIs. Who owns OEE? Who owns on-time delivery?
Hmm.
So yes.
And when you talk customers, I've seen at some companies where you talk internal customers versus external customers. Are those the types of conversations that you're having?
Yeah, 100%. And you're
Okay.
stealing thunder from one of my
Okay,
lists.
sorry.
No, 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 but I
Sorry.
love it. I think we can cover it here. But absolutely. So clearly a business, there's an end customer who's paying some level of money or cash and currency for the product you're producing. But you need to think internally. Who are those internal customers? And how do I satisfy my internal customer? And without that appreciation and without and this is where the operating culture comes in. Without we would say without the three nevers. So to satisfy you, Tony, as the next stage in my process, I should never pass you a defect or pass you a problem. So to do that, I need to make sure I never produce a problem, right? And so that focuses myself on the quality of my work. But then we look upstream to the people who are our suppliers, and I will never accept a defect or a problem from them. And if you take those three nevers and you apply them internally, not they're essential for manufacturing, but you apply them in all of the operations realm, you start building this accountable organization that you're my customer, I don't want to pass a problem to you, so I'm not going to produce it, but I'm also not going to accept it from my upstream supplier, and that upstream supplier is operating with the same three nevers. So you end up with having clarity on who's responsible for what and
Yeah.
satisfying your internal customers.
I love that never. So it's never pass a problem, never accept a defect or a problem, and never make a defect.
Yes,
Okay.
technically it's the three nevers, and it's never accept, never produce, and never pass. Just that's the flow. But yes,
Okay.
and you've got to reiterate that time and time again with the teams.
Yeah.
Sorry.
And I can see how that also leads to kind of a culture of excellence, right? We're all leaning on each other to produce quality product all the time and holding each other accountable upstream and downstream.
Correct.
Awesome.
And
Thank you.
and that's just to share some a little bit of insight. That was one of the central tenets of the Proterra production system. It's customer centricity. What does that mean? Well, that means these three nevers, making sure you understand your customer, making sure you're giving them what you want, and the way we do that is by applying those three nevers, everyone in the organization.
Amazing. Thanks, Gwilym.
Okay. That has kind of covered the first point, which is around defining your operational culture. Um, I just go back to what I said at the beginning, like genuinely, this is not just for startups, but this is one of the most important things. It's easier to establish a culture day one than to change a culture years in. So if I could give any advice, that would be the one thing. Please follow that. Second one, the second point that I wanted to touch on here is I've called it thoughtful organizational growth. And this is two parts in my experience anyway. So I think the first one is that the best operators don't make the best supervisors, and the best engineers don't make the best leaders. And not just in startups, although this one I've seen more in scaling organizations, where there's a tendency to promote people based on their excellence as an individual contributor. So they do the job great, they're a superb engineer or they're a superb operator. Well, we're going to, sometimes for reasons of we don't want to lose them, so from a retention side, and sometimes for other reasons, maybe it's just that we don't have the time to go out into the market, or we don't have the time to develop internally. Anyway, we end up with very good individual contributors in leadership positions. And that creates trouble for your organization. Your leaders, I like to say the leaders bring the weather. So the leaders set the comes back to the culture, you know, the way your leader acts, the way the leader empowers their team will determine how that organization grows. And I find that especially, and I have seen this in my previous organization, a little bit in Proterra, that maybe we don't have the right people in leadership positions. So that's kind of the first. I'm saying thoughtful organizational growth because we have to retain talent. So just be mindful that your leadership will, a bad leader can cause more problems than losing, in my experience, a good individual contributor talent. They affect so many more people. So think about, thoughtful means think about your development programs for that emerging talent. If you don't have time to grow those excellent individual contributors and give them the right tool set to be leaders, think about pulling in from outside. I know it's not always the right thing to do, but you should think about that. The second thing, though, kind of looks at that pulling in from outside. Sometimes there's a tendency, especially when you're in initial growth mode, to look too far into the future. You of course you need to consider the future size of the organization, but if you look too far, you can end up with a very top-heavy organization where your fixed costs basically spiral, and if your scale up and your revenue expectations don't meet plan, for example, you're then under a lot of pressure to manage fixed costs. So the other part of thoughtful organization growth is think to the future, in my experience, but not too far to the future. You know, you've got to be, there's no other way of saying it other than thoughtful. Your senior leaders are fixed costs. They're fixed for a reason, because they're expensive and difficult to change once you've established. So I would encourage to have thoughtful organization design, especially in the interim. In my experience, actually, leaner is better. That doesn't mean that you expect people to work 80 hours a day, but growing your fixed costs, so your senior leadership, in line with your organizational scale, so the operational scale, it's important. I'm not sure if this is the right phrase, but sometimes I have seen the field of dreams approach, and it's like, if you build it, you know, they will come, and the volume doesn't come, and then you're left with a fixed cost problem to manage, which is burning through your cash. So that was the kind of the second point. And Tony, if it's all right, I would like to throw in one other point. I'm just looking at time. I think we're okay. One other point on this, which I was on the fence about sharing, but I think it feels like it's the right time to share this. Consider your successful operations, or to be a successful operation. What makes an operation successful is stability, strong process, and standardization. What makes a successful product development successful is the innovation side. So you've got these two tensions, right? One wants stability and one wants fast pace and innovation. So successful operations on one side, successful product development on the other. A successful business finds a way of balancing both and recognizes the need for both. So the way I approach that in my experience is making sure that there's clear handover. So I talked about the production system, the operating culture for the operations, but this extends it a bit further, making sure that there's clear handovers and accountabilities from when a process ceases to be the baby or the responsibility of an engineering team and becomes the accountability of the plant manager or whoever your operational lead is. Now, that doesn't mean that the engineering teams stop supporting, because you will always have issues and they need to support. But clarifying how you do that knowledge and accountability transfer in your organization is important, because you run the risk of, you know, the innovation side pushing into the operational side, causing instability. And if you've got that instability, you will really struggle to scale. Your quality will suffer. And yeah, at the end of the day, your overall delivery of your product to the customer is impacted. So it's important at the right time, and I'm saying at the right time, not to be, you know, theoretical and old Jedi, but different organizations would do it at different times. The way I like to do it is we set a target probably 3 months after process launch with clear KPIs. And at that point, if the KPIs have achieved, 100% plant managers accountability to pull the engineering resources when they need them, but it ceases to become the engineers and the engineering team's responsibility. And yeah, there are times where it's difficult. I've been on the engineering side and it's difficult to let go, but that's part of the reason why you need this accountability. At some point, this is no longer a development, this is an operation. So that was an added bonus on that one, Tony. Sorry.
That was great. I love that. I've seen some companies use a commissioning plan as well to handle that 3 month, and it can be as simple as an Excel spreadsheet, but it's something that everybody agrees on and makes that transition happen.
So this brings me to my third point, which largely the thunder has been stolen by Tony already, but this is about developing your processes. This is early stage development with a line of sight to the end customer. So firstly, know what is that customer? It's not the end customer. Of course, you have to have a process that's producing the right quality for them at the right cost, but it's that internal customer. And as an engineer developing a new process, my end customer was the hourly operator or the maintenance technician. Those guys that Thursday night or morning, 1 a.m., are trying to run this process that I've developed and deployed in their factory. Those are the end customer. And why I bring this up is the other issue I've seen, again, not just in technology startups, seen this in automotive as well, is we produce, as a group of engineers, we produce what we think is a perfect process, but has to be run by a rocket scientist. And you cannot expect your hourly technicians and even your high skill maintenance technicians to ever get to that engineering level. So it's a core requirement of the engineering teams developing the process, not just to get the product off the end of the line at the right quality, but to consider how are those customers going to be able to do it 24/7. So the simple way that I see this is engineering teams need to dumb down the maintenance, dumb down the effort to run the process, because your production operators and your maintenance technicians have come from the bottom up and start to learn the process, and they need to meet in the middle. So it's way easier to do that before you design and commission the process. And even in my current role, we're still facing that a little bit, where we're doing it after we've launched the process. We're trying to simplify the process down, and we're building the capability. You meet in the middle. So the way this, I've seen this done really well, and this goes back actually to more traditional automotive, is at the very beginning you inject the voice of the customer, and you physically involve the local engineering, maintenance, and operational teams at the very beginning. And it gives you two benefits. Firstly, the voice of the customer, They know way better how the day-to-day running of the operation is going to go. So you get their input about how feasible and practical running this process is going to be. That's point one. But point two, and this is also really important, is that you start to develop accountability in those teams who are ultimately going to own the process. So going back to my second point about transferring of responsibility and accountability, if you can inject your production team and your local plant engineering teams at the very early design stage and involve them in design reviews, they start to build ownership for that process. And it makes the launching, wherever the site is that you're going to launch it, it makes that launching process and that handover and the whole speed of ramp up so much better, because you've got the accountability from the beginning. So the last and final point I touched on before is to do that, understanding your customer. The three never approach is the way we do that. We get our teams to sit down and consider who is their customer from an internal side, and how and what does never pass a defect mean in their way of working. So Tony, I already talked about that, so I won't cover that again.
That's amazing. Thanks, Gwilym. I like the idea of treating the local engineering team as a customer, and I've got a couple of points I want to make on that, and I want to get your reaction to something, Gwilym, and just understand how the Proterra team does it. And then I see there was a question on the Northvolt failure as well. So just I want to offer perspective and get your response to that. So in terms of understanding that customer, I've been in organizations that actually require the R&D engineers or chemists, whatever, to rotate through some time in the factory. And I know there are some organizations that do that, some that don't, and it teaches you kind of the day to day what those folks go through, but it's pretty expensive, right? To really understand that on that level, I'm typically seeing things of like 6 months to a year rotation, and that can be an eternity, especially for a startup. So I'm curious to understand how does Proterra go about that?
I'll give you two. I'll tell you what we do at Proterra, but I'll then also give you how engineering talent is developed. I'm going to use Nissan as the example here, but from a Proterra side, so anyone new to the organization, and I will say we have two sites. One is in Burlingame, California. That's the R&D. And this hasn't extended to them yet, but the CEO is going that way. That's the next step. But anyone who comes in, regardless of what their job is, whether it's IT or HR, come into the organization and they're based in the Greer facility, they spend I'm going to say first 2 weeks. Sometimes it's maybe weeks 2 and 3 rather than weeks 1 and 2, but they spend 2 weeks on the production floor. So it varies depending on their function. So if you're coming in as a quality engineer, for example, you would spend more time with the quality focused functions in the plant. But for someone like an HR function, it would be more of a general overview. But part of those 2 weeks, and the largest part, is actually working side by side with the production operator, the hourly operator, building our product. Not just so that they understand the customer, it also gives the added benefit of understanding what we do, what we make, what our product is. So it ticks both boxes. And going back to very first point one, define your operating culture from day one. It means that at the very start, they start to see, we would call it Proterra production system in action. We have a tagline, better never stops. So what does better never stops actually mean? Well, it means understanding your customer. It means the three nevers. It means you're doing for the minimum cost, we hit the customer quality and we hit the delivery metrics. So with that's what we do in Proterra. I'm an ex-farmer. I grew up on a farm, so we used to have sheep, and part of what we had to do on an annual basis was dip sheep, so push them under this big swimming pool, for want of a better word, of some chemicals which I'm sure are illegal now. But anyway, the point was it was to immerse them in that in this case, in that fluid. So I call it, we sheep dip everyone for 2 weeks. This is what Proterra is. This is our culture. We immerse them in it. And then as they grow, they grow understanding how we build our product, what's important to us, and what our product is. So that's the
Amazing.
Proterra way. I'll share because I think this will be interesting. I don't know how applicable it would be for all of the founders and investors here, but when you grow engineering talent, what I found is really, really important, especially process developing engineering talent, people working on process design. Nissan would first put you, as an engineer, your first job was supporting the line, production line, understanding how the product was made, what's important to the customer, the operators. You then moved a little bit upstream where you were taking the output from the advanced process design, industrializing it. And then, only then, once you had done that, you then moved right to the beginning, which was the start, which was developing the new processes for the new products. And the logic was the decisions you're making at that advanced stage, you have to understand the impact of those, which will happen 4 or 3 or however many years later when it's finally industrialized. You have to understand the impact of those decisions you're making to the end customer. So that's just another viewpoint, and it works well. That's how I was growing as an engineering talent.
I love that. I love that. The other point that I think is worth making is that Proterra has um, engineers there to participate in that development process. And we've seen that run into some issues with some of our portfolio companies where they don't have an experienced operations person, let alone the staff there to comment on um, designability reviews, safety reviews, things like that. I think it's critical to have somebody that intimately understands that operating environment as part of that process. And it seems like that is core to your philosophy at Proterra.
Correct.
Yep, great. Okay, good. Okay, so one of the questions coming in here was to get our thoughts and lessons about Northvolt and Natron Energy. I'll tell you, I'm not super close to either of those companies. I've heard some things about Northvolt, and I want to maybe expand on that to the industry in general. Some of the challenges that I've seen personally, and this is a very technical point of view. But what I've seen, and one of our founders calls it people being rushed, not going fast. So there's a difference between moving fast and rushing, and people kind of skipping scale and proof of concept before they go straight to the gigafactory. So one of the ways that we frame it is you have that prototype that you do at bench or in your garage for some people. You need to take that to a pilot plant, a demo line, and then that's when you start talking about building the gigafactory. And some of the things that I've heard is that sometimes the technology doesn't hand off well from one piece of equipment to another. You want to learn those things before you go and build a large scale factory. And I would call that's what you're doing at a demo line, right? This is kind of series A, series B time frame where you're actually seeing the product made, how it would be made at a large scale facility, and working out all those kinks of transport, of logistics, of handoff from one piece of equipment to another. Curious to get your take on that, Gwilym. Do you have a similar philosophy there?
Yeah, we do the way you described it there in terms of taking it from the initial concept all the way through to scalable product. Yes, we follow more or less the same. Um, I, I'm trying to empathize with people who, to your point, don't have those engineers, and how you can visualize what good looks like, right? So um, even in Proterra, we're relatively young. Our engineers have come out from different organizations. We talked about that at the beginning. Well, what I find it really useful for those engineering teams to think beyond just the technology and think about how you turn a great technology into a scalable manufacturing product or a manufacturable product. It's almost all of us will have networks where we will be able to get into some kind of manufacturing environment for a look. I'm sat here in Tennessee, and I know the local Nissan plant. They do tours which are open to the public. I think it's if you don't have the engineering talent on the books, you can take the engineers and the development people that you've got, and you can visit sites, and it gives just an insight about what a scale manufacturing environment looks like, which they can then translate into how their product is being assembled or designed to be assembled. So that design floor manufacturing assembly. And I use the example of Proterra being relatively new, people from all different walks of life. I regularly, and just last week we were at a Volvo facility, we regularly go as an engineering team to just benchmark and look at what good looks like somewhere else. It doesn't have to be the same industry. In fact, it's better if it's not the same industry, because they typically don't like their competition walking around their factory. But most operations are open to visits, especially if it's non-competitive, because they also want to learn. So I would throw that out there as the situation you mentioned, very early sales startup who maybe doesn't understand what good looks like. Leverage your network, get into the sites that you can, and take advantage of seeing the operations. And your engineers can then take those lessons learned and build them in to your product as you move through those different iterations that Tony mentioned.
I love that. I love that. So benchmark in adjacent industries, let's
Yeah.
say. Yep. Yep. Another area to the benchmark that I encourage our portfolio companies is that thoughtful growth. So you can get a good idea from Fortune 500 companies that are publicly traded where their overhead is going versus their op spend. And we say that as you hockey stick revenue, your op spending is typically hockey sticking with it, not your SG&A, not your R&D. Those tend to be a couple percentage points of the spend. And to your point, to look ahead, but not too far ahead. Your Series B, you don't want to be uh, matching spending of Fortune 500 companies, but you want to kind of be trending in that direction. Okay, awesome. Okay, there's a question about tariffs. So, with all the unknowns in the US and interest in the rest of the world in climate tech, where should US based companies focus, here or abroad? And I'll give a quick spin on that, Gwilym, if I can. I would say not just tariffs, but manufacturing. There's just challenge after challenge that comes at you. Even if you've got a stable process and a factory and everything's going well, you'll have the supply chain crises that stem from tariffs to hurricanes. COVID-19 is a classic example where all the supply chains locked down. So I think your advice of look ahead but not too far ahead is pretty sound here. You want a strategy that's pretty robust. The tariffs, in my opinion, are volatile right now. It doesn't seem to be something that's locked in. So I would make that one consideration, but you really need to look broader for your strategy than just that.
So can I add to that, Tony?
Yes,
So,
please, please.
so you're right. I personally, I take a longer term view. You have to manage through, find a way through the short term pain of things like tariffs. But your ultimate longer term goal should be supply chain resilience. Okay, so yeah, and this I'm going to go a bit deep into here, because if as a technology startup, what I found in Proterra is in the early stages, the components that you need to manufacture your product, you may not have the local, here in the US being local, you might not have the industries that can provide you the components you need. So in Proterra's world, we were forced in the early days further afield. So yes, China, yes, Taiwan, some of those areas which have actually the advanced manufacturing processes we needed to make the components to make our product. But that isn't a long-term resilient strategy. So we look to measure resilience. Yeah, yes, tariffs is part of that, but the reality is we look more at resilience. So what is our lead time for components? What is the geopolitical risk around where we're sourcing our components? Are we single sourced or are we dual sourced? And we are actually currently going through not just tariff related, but mainly because of what I said before. Initially, when we did a lot of our resourcing in the early days, the local the technology wasn't available to be manufactured in the US. Well, that is, most of it is now. So we're in the process of driving our resilience through onshoring or nearshoring, and that obviously has the added benefit of improving our tariff situation.
Yeah,
But
that's
again, there's
awesome.
an ROI discussion there about, you know, volumes and tooling costs, et cetera, et cetera, et cetera. I'm a big proponent of, especially for technology such as batteries. You know, we're BABA, we're Buy America, and that's something we're very proud of. And we are trying to establish ourselves alongside actually a lot of other organizations in that battery belt around South Carolina, North Carolina, to provide into the US market.
Awesome.
So that's my personal view. I'm actually very proud of that, even though I have a Scottish accent.
Love it. And what I heard from your answer there too is sometimes that is going to change depending on the phase of your company and just the state of the world. You have to maintain some flexibility. Um,
You do, and Lincoln was. Can I add a comment about supply chain
yes, please.
and operations? So, you know, we've talked a lot about developing the process, but it's important for leadership to recognize that whilst everyone might see the initial bottleneck as maybe the manufacturing process, I can guarantee you when that's fixed, the next link, and it's called a chain for a reason, the next link in your supply chain will be, if you've got, you know, the weaknesses in your supply chain, that will then be exposed. So as soon as your manufacturing ramps up and it's those 4 M's are all purring together, something will break upstream in your supply chain. So without overcomplicating it, as in my role or as a founder role, or you need to be spinning both of those plates at the same time. You've got to make sure that you are actively managing your supply chain, improving the resilience, as well as scaling the manufacturing.
Yep, I love that. And I think it's good insight on why operations like stability so much. They're not in a stable environment. There's always something coming at them, so they don't need an inherently unstable process to run on top of that.
Correct, 100%.
Love that. All right, there's a compliment here on what you're sharing, and an ask if you have any examples in manufacturing in China. Have you seen processes over there that are a little bit more frugal and innovative because of that? And do they work differently with their large human scale organizations that you've seen in other parts of the world?
Hmm. No, no, China specifically, but and this is, I think this can be applied to other organs. So China is a little bit difficult for me to answer on that question because in some organizations in China, they have the highest level of automation I've ever seen. But in other organizations in China, you will find that they go the lower capex route where they're far more manual. So I've actually seen both sides, and yeah, that the benefit you get from the lower automation is you typically get more flexibility if you've got more people. But
Yep.
I feel it's depend. This is all subjective because it depends what the process and the operation that they're actually completing and what product they're making. But there's a trade-off between, you know, the quality and the mainly because of repeatability. If you've got highly manual organizations, so if you go back to the very first point around operating culture, standardization. The reason why the Toyota production system and any production system that are in established organizations hammers on about standardization is because to secure your quality using people, we have to be all doing the same thing at the same time, and that's how you can almost predict. You wouldn't. I don't want to say we're turning people into robots, but reality is just that repetitive following a standard which allows you to predict and secure your quality.
Yeah.
So it isn't, yeah, manual operations, I worry about the output on the quality side.
Yep, good point. And so then even to the frugal point, those highly automated operations, that takes some CapEx there. That's probably
Yes.
not the most frugal. That's not probably the right word for it. Yeah.
But in the case of a lot of Chinese operations that I've seen, they're producing similar components for many different people. So that's obviously there's an ROI discussion there, but
Yep.
higher levels of automation make sense. So
Yep. Okay, we've got two more questions. We'll see if we can pack them in here. One of them is a favorite topic of mine, and that is contract manufacturing instead of internal manufacturing is how I'd frame that. And the trade-offs are in the question, and I agree with this. Sometimes internal manufacturing can require more upfront capital. So especially for the early stage founders, more difficult to raise that in times, and sometimes it takes more time to develop. So if you can find a solid contract manufacturer, you can often be up and running in a matter of months, where my experience with capital projects is more on the line of years. Did Proterra entertain contract manufacturing, or would you even consider some of your suppliers? Have you offloaded some of your manufacturing um, areas to suppliers that can just send you that component instead?
no, we have not. Pure contract manufacturing, we haven't looked at it. And actually, I was wondering what you were going to throw at me with this, because I really have a great deal of experience with contract manufacturing. But regardless of contract manufacturing, there's always a decision as you're setting up your process about how vertically integrated you want to be. So, like the components, you can make a larger number of those if you want in-house. So typically, and Proterra did it, but every other organization like Nissan would do it, BP would do it. You have a make versus buy process. So as you start walking down your BOM, so yes, you've got to manufacture this as the level one product, but as you walk down your BOM, there's decisions that can be made around to become more vertically integrated. I think I haven't worked for Tesla, but I've got colleagues that do, and for a large portion, Tesla are pushing heavily on like almost full vertical integration. Um, there are there's a cost aspect to that. Can you reduce your component cost? But the other side with that is that I would throw a bit of caution to is if the more vertically integrated you become, so i.e. the more make processes you have at your manufacturing site, the more capability and the more problems you have to be fixing at the same time as scaling up. So as you're scaling your manufacturing, your supply chain, so your suppliers typically are scaling theirs at the same time. Now that's their job to do, and you're using your three nevers. You're never accepting a defect from them. Hopefully they're never producing or never shipping you one, but you're never accepting. So you manage that sort of on the outside and hold your suppliers accountable. If you bring those processes inside, then you're doing that at the same time as scaling your core process. So I would, it's important to consider what is our, our core technology that we want to own and produce, and what do we want to keep outside. So I would see that more from a make versus buy.
Love that. Love that. Yeah, we often advise our portfolio companies on where also they can uniquely provide value. If it's something to bring in house, just to bring in house, it's something that we like to challenge, and there's extra capex, there's extra headaches, like you mentioned, with it, extra time, and sometimes as small organizations, you just can't handle all of that. Okay, let's see. We've got several additional questions here. I don't know, Gwilym, if we have the chance to get into any of this, unfortunately, but good sign that we continue to get those questions. So, any closing thoughts that you want to do in the last 2 minutes here?
Um, I'll go back to my advice with a capital A, just bullet point one. You've mentioned, Tony, the importance of stability in manufacturing, and the way to achieve that is from day one, have that, it doesn't need to be complicated, but operating culture, way of working defined. So all the people that you're bringing in have that alignment from day one around what you're expecting to build your culture, because you don't define it, culture will emerge, but it won't be necessarily the way you want it to, or the way you're trying to run your operations. So that, I'd say that was number one. I'm going to leave you with that thought.
Amazing. So be deliberate about that and be very early, set that culture.
Yeah.
Good. All right, Gwilym, thank you so much for joining me here. Thanks for all the insights. I love the three nevers. And thanks everybody for joining. Very much appreciated.
Thank you very much.